Okay, what we're going to look at next is an example. So, I'm going to have you actually do the example yourself. But I first want to talk about what I'm giving you. Using the information below, prepare December 31st, 2020 financial position. The solution on the next page, and we'll go to the solution and talk about it. But first, post-closing trial balance. Trial balance, as you know, is just of all the accounts of the organization and their debit or credit balance, and of course it has to balance at the bottom. So, post-closing is after closing entries have been done. And what are closing entries again? What do you close? You've closed revenues, expenses, and OCI items, either to retained earnings or OCI, AOCI. Now, what I want to point out is with retained earnings, well, actually talk about dividends. Just to remind you, with dividends, you can either debit retained earnings if you're giving out dividends, and credit cash, or debit dividends declared or and credit cash. If you do this second one, you would also close dividends declared to retained earnings. Okay, so I looked here, there were no dividends or cash dividends, sometimes it's called. So I knew I just had to close revenue, expenses, and OCI items. But had they shown a dividends declared or a cash dividends out, I would also have to have closed that. Okay, so you know. So, since these have all been closed, is retained earnings up to date? Yeah. There's no income statement items on this trial balance. So there's no income statement items on this trial balance. Okay. If it was an adjusted trial balance, you would have to close the accounts into retained earnings and OCI if there is anything, and then do the balance sheet. Okay, and again, you guys, if this isn't making sense, I can't reteach an entire chapter from intro. So go, or more than one, to figure out the accounting cycle and all that. So go review that, either in your old textbook the way you learned it. It might feel better and more fun, or in Wiley Plus. Okay, so what you need to do, you guys, is pause the video and try this question. So I'd go through and label what each one was. So accounts payable is what? What's our accounts payable? Is it an asset, liability, or equity? The word payable is a good clue. It's a liability. and it's current. Accounts receivable is an asset, it's current. Now accrued interest. Well, interest, we can either get interest or give interest out. It's got a credit balance. So is it an asset that it's coming in, a liability that's going out? It's a liability. And so on. You can go and look through all this. Deposits received from customers. What do you think that is? Oh, sorry, I was waiting for you guys to answer me. Just ignore me. Well, if they're deposits, we may have to give it back. It's not revenue, so it's going to be a liability. Right, so think about a customer came and said, I'll put 10% down on this, can you hold it for me until 2 weeks from now? They come in, they have all the money, and we give them their deposit and then they pay. Or the other. All the others are pretty good. I think you should have covered all of those either in intro or in my notes. So, pause the video. And then I'll go through and we'll talk about the solution on the next page. So just pause, and when you've tried it, come back and we'll okay, so on page 5, this is what your statement should have looked like. And some things you want to note. Oh, and this is illustration 512 in your text. So this is a single date, like a snapshot in time. Okay, so what they did, they first created your sections. Okay, so property, plant, and equipment. We've got current assets to here. Here's our long-term investments. Just gonna go back and see how I numbered them in your notes. I didn't. Okay. And then this is listed separately. And intangible. So we've got 1 section, 2 sections, 3 sections, 4 sections, and then these are the others. So that would be section 5. Now, then you're going to do the same, liabilities and shareholders' equity. So you're going to have liabilities. That's 1 section. And then another one for long-term debt. You notice you need a total liabilities here. Here you didn't have a final total until you got to total assets. So, just looking at this, we had all these summed up, and you get total current assets here, your long-term investments here, excuse me, Land, buildings less accumulated depreciation, total property, plant, and equipment, intangible assets, goodwill, and then your total assets. So the general rule is if you have more than one item, let's move them in and then total them to the outside. Okay, so current liabilities, here's their total. Long-term debt, here's their total. Now notice there's no current portion, because these are like bonds. Principal or face value is not paid until the end of the bond. Okay, then shareholders' equity. Paid in on capital shares, so that's the original issue price. And it tells you there's 7% cumulative authorized, issued, outstanding, and so on. Then there's contributed surplus. And these three are all lumped together. Retained earnings and accumulated OCI, then listed. Totaling total shareholders' equity. So all of that will go here. Just like all of this here. Then, if you add these two together, what should you get? The same as your total assets to get the 1720,554. So, is there any questions? Oh my God, I'm reverting as if I'm in front of you in the classroom. Okay, so my suggestion, you guys, you haven't done a statement for possibly a couple years. So make sure you try this, do the question, then check your work. The indentations aren't that critical. And then keep doing it till you can do this problem, then do the ones in the text. Suggested problems, and then go to your text. Okay, so I hope this made sense. If you have questions about where some of these belong and how are you supposed to know, a lot of it's memorization, just like you had to do an intro. I just get used to different words, like accrue, that's just built up. And again, accrued salaries, wages, other liabilities we have to pay. Other than that, there's not much different. Make sure accounts receivable, less allowance for doubtful accounts, and inventory, LC, NRV. And so on. Notice up here is prepaid expenses because it's an asset. And down here, oh, deposits from customers. But one that's usually here is unearned revenue. Current liability. So there isn't one here, but that's easy to forget. Okay, so that is the statement of financial position or the balance sheet. Okay, so hopefully that made sense. Don't forget to try the problem. It's you just look at this and go, oh yeah, oh I get it. You have to do it yourself. Okay, I'll continue with part D on the next video.